How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. I also got to put in the disclaimer, I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. So today we're going to be talking about ChargePoint. If you don't know already, ChargePoint are one of my most high conviction plays. When we talked about it on this channel, when it was in the low 20s and even testing in the $19 range, I was telling you guys to load up. So if you don't know already, it's been on quite the run, and they also just released their financial results, which we're going to be going over in this video. But before we get started, I'm going to run through the agenda. If you are new to this channel, I just want to let you know we have timestamps down below in the description to make navigation easier. But if you are a shareholder or you're considering to take a position, I highly suggest you watch the full entire video. So the first thing we're going to be going over are the financial results. We know how important this is in regards to seeing upside in the stock itself and just seeing how the company's doing overall in general. Secondly, we're going to be doing a technical analysis. Like I was saying previously, we got into ChargePoint when it was in the low 20s. So many of you are going to be like, hey, is it too late? Where's a great area to actually start buying? Where should I be loading up at? And also anyone who's in the particular play right now, where could we look in regards to where it's going to be running up to? I feel like this is very key, especially if you have short to medium goals with this stock. Then afterwards, we're going to be going on FinTel. We're going to be taking a look at the institutional ownership and as well as the short interest information. And why this is important, we want to know, are institutions loading up on ChargePoint? And we also want to know, what is the overall market sentiment? Is it positive? Is it negative? Do they believe that the stock price should come down? Well, we're going to be figuring that out. And then when all of that is done, I'll be giving you guys my final thoughts. So let's get into it. So we're on Business Wire, and we're going to be going over the financial first quarter results for ChargePoint. ChargePoint reports first quarter fiscal 2022 financial results. So revenues increased 24% year over year. Network charging revenue increased 36% year over year. So that is good to see. Record number of new customers, bringing total to more than 5,000. It's great to see growth there, more revenue potential, right? 610 million cash balance to support growth. So what does this mean? They have a lot of cash on hand so they can further facilitate growth in the future. Our first quarter reflects the strength of our diversified business model across commercial, fleet, and residential, and the benefits of our industry-leading scale, said Pascal Romano, President and CEO of ChargePoint. We added more new customers than any other prior quarter, and our commercial business experienced a strong recovery after the COVID-19 related headwinds last year. The driver of our business, the electrification of mobility, continues, with over 2.3 million EVs expected to be sold in the US and in Europe in 2021, a year-over-year growth rate of over 40%. We expect an acceleration in our business as EV penetration increases and economies in our key markets reopen. Our strong balance sheet and capital-light business model positions us to continue leading the EV charging industry. So first quarter fiscal 2021 financial overview. Revenue for the first quarter, revenue was $40.5 million, an increase of 24% from $32.8 million in the last year's quarter. So this is definitely a great improvement to see here, and we know the fact that they're growing their revenues, we can expect to see this on consistent reports in the future. Network charging revenue for the first quarter was $26.8 million, an increase of 36% from $19.7 million in the last year's first quarter. Like I said, very strong. The growth reflects strength in the demand for commercial fleet and residential customers. Gross margin, again, this is very huge here. Let's go over it. So first quarter GAAP gross margin was 22.8%, down from 23.7% in the first quarter of last year as a result of principally of mix which favored lower margin DC and residential offerings in the current quarter. First quarter GAAP non-GAAP gross margin was up sequentially from 21.0% in the fourth quarter of last year on similar mix, reflecting principally ongoing component cost reduction activities and operational improvements. First quarter non-GAAP gross margin was 22.8 compared to 23.9 in the prior year's first quarter. So this is something definitely want to keep an eye on here, because what we want to see is actually improvements in regards to overall gross margin. So I'm going to make sure I'll keep you guys updated on that on this channel. Net income / loss. First quarter GAAP net income was $82.3 million, which included a $53 million gain from the change in fair value of warrant liabilities and an $84.4 million gain from the change in fair value of contingent earnout liabilities, partially offset by $7 million in offering costs allocated to warrant liabilities. GAAP net loss in the prior year's first quarter was $30.1 million. Non-GAAP net loss in the first quarter was $39.4 million compared to $29 million in the prior year's first quarter. Liquidity. As of April the 30th, 2021, cash on the balance sheet was $609.8 million. During the quarter, of 11.9 million warrants were exercised for $73.8 million in cash. So definitely something to keep an eye on and to be aware of. Like I said, any company that is cash heavy, it does open up a lot of opportunities. Shares outstanding. As of April the 30th, 2021, there were 305 million shares of common stock outstanding. This is very key because we want to see if they're going to end up actually doing any more offerings in the future. And if they do, this does add to more dilution, thus lowering the value of the shares. But if we're looking at this as far as the long term is concerned, there's still upside in this stock, but it is something to pay attention to. For a reconciliation of GAAP to non-GAAP results, please see the tables below. So, second quarter and full year guidance. ChargePoint expects revenue of $46 to $51 million for its second quarter ending July 31st, 2021, and confirms its revenue outlook of $195 to $205 million for the fiscal year ending January 31st, 2020. So it's definitely great to see this kind of guidance, and it does show that they're expecting to see a lot of growth as well. So we're going to be doing a technical analysis for ChargePoint. Let's see how it performed on Friday. So it ended up closing today at $28.11, being up 7% on the day. On the low, it tested $26.44. Then on the high, testing $28.24. Just in case you are curious, the chart that we're using is actually the daily 1 year chart. So when we take a look at the price action, when I was talking about adding to your positions in regards to ChargePoint, we were in the $20 range, and if you can catch it in the 19s, even better, but we were in the low 20s. So we've seen quite the run up from ChargePoint. It is looking very bullish here, being above the 21-day EMA as well as the 200-day, and it definitely looks like it's trying to come up to reclaim the 100-day as well. Do keep in mind of the fact this is a stock that has a 52-week high just under $50. So what we are seeing, I want to see ChargePoint make that move to claiming the 100-day and getting to the $30 range, and I feel like it could really start to move from there. Also, if we take a look at the RSI down below, it's getting to 63. We know anything that is 70 or above is getting into the overbought territory. So if you are considering to get into a position, maybe you got into this late, I would definitely be looking out for pullbacks. We've seen it pull back to 26 and also going up to 28.11 where it closed. So that's very normal for this stock. So if you want to get into a position, I highly suggest a dollar cost averaging approach. The initial position, do not go in heavy. So just in case it does pull back, you could take advantage of those opportunities. We've seen these hills and valleys for ChargePoint already, and there's no doubt in my mind this can potentially happen again as well. But do know of the fact we do have a serious area of resistance here right around this 3250 level. So if we're able to actually pass this, things can get very interesting here. So we're now on Fintel. We're going to be taking a look at the institutional ownership and as well as the short interest information for ChargePoint. So as we scroll down on the page, green rows indicate new positions while red rows indicate closed positions. So you can see here this is taking into consideration May as well as the end of May and also taking in the beginning of June. So we can see institutions have been loading up on ChargePoint. So it's definitely showing some bullish behavior here. Even as we start scrolling back, wow. So definitely impressive movements, and a lot of institutions are bullish on this stock. As we take a look at the short interest information, as we take a look at the short volume ratio, it is at 25%. So this is above 21%. So it does mean this stock has some short squeeze potential in it. But it also does tell us in regards to overall market sentiment, it is negative. They are saying, hey, the price needs to come down. So put this in perspective, out of the amount of shares that were traded on Friday, which was 6.5 million, 1.6 million of those shares were actually sold short. So very significant. Short shares availability stands at 200,000, updated 11 minutes ago. And the short borrow free rate, this is very high, 21.77%. If we take a look at the history of the short volume ratio, we could see here from June the 1st and on, it has been above 21. If we look at it previously, it was below that, but if you look at the 21st, it was right at 20. So seeing it look like this is something definitely to keep in mind of. So there's going to be more volatility in this stock, and it's part of the reasons why I'm saying there's going to be fluctuations to get used to. But at the same time, if it continues to run that it's currently on, then we can definitely look forward to seeing some serious moves to the upside. So for my final thoughts for ChargePoint, I definitely do see a lot of upside in this stock, and it's part of the reasons why, like I said, it's one of my high conviction plays. If you don't remember, when we spoke about it in the previous videos, we have a price target right around $46 or just under $50. It did end up getting there, not 50, just right underneath it around 49, but I do believe it should be able to get back there. If you were able to get in the $20 range, the $21 or the $22 area, ChargePoint could definitely be one of those stocks a year from now, or even within 2 years, you should be able to double up on your money if you got in around 22, 23. Do look out for those pullbacks because this is a volatile stock. We saw that the short interest is fairly high at around 25%, above 21%. So what does this mean? That means the market overall in general is telling us, hey, the price needs to come down. It is too expensive. So that's why I was saying if you have a dollar cost averaging approach, you could take advantage of those dips and be able to get a better price. I do not want you guys buying at all-time highs or while the stock is actually running up. But if you are going to do that, then make sure you have a dollar cost averaging approach for your position, so you don't go all in right on your first position, okay? I want to make sure that I emphasize this. In regards to their financial results, hey, things were looking good. We're seeing that they're increasing their customer base, and we're also seeing increases and improvements in regards to revenues. What I want to see showing consistency is also looking at those profit margins. I want to see that getting better, and also on top of that, I want to see them actually capitalize and continue to take advantage of the transition in regards to the EV space. We already know Biden's very big on his infrastructure plan, and ChargePoint will benefit from this. So for anyone who was able to have their costs down inside the low 20s, I know some of you even got in lower than that, even better. Like I said, this is a stock that you should have in your portfolio, especially if you believe in the potential of the electric vehicle and mobility market. Hope you guys found this video helpful, and we'll be talking real soon.